Okay, let's take a look at this equity method problem. Parent company invested $1 million in sub company for 25% of its outstanding its outstanding stock. Sub company pays 40% of net income in dividends each year. And next, I'll read the instructions. Use the information in the following T accounts for the investment in sub to answer the following questions. And I should have pronounced that T account, not T accounts, because there's only one. Okay, so what we see is we've got, looks like an increase or beginning balance of 1 million, an increase of 110,000, and a decrease of 44,000. Now let's tackle the questions, and we'll just solve them right here. Question A says, how much was parent company's share of some company's net income for the year? Okay, so what this requires us to do is interpret what we see in the T account. Now the million looks like the million investment. Okay, so I'm going to write that off to the side. That looks like the investment. Right? That looks like that entry. How much was parent company's share of income? Well, when we use the equity method of accounting for an investment in a subsidiary, we increase the investment account when the sub incurs income. So that 110,000 must have been the parent's share of the income. And you know what I'm going to do is slide both of these over so we can read them. Okay, so that's the 110,000 right there. So if I start dropping down the answers, it's 110 is the answer to A. B says, how much was parent company's share of sub company's dividends for the year? Well, another point to recognize with the equity method is that when you receive cash as a dividend, you're essentially reducing your investment in the sub account. You're replacing the dividend, which is a distribution of that investment, or you're replacing the investment with cash. So we would debit cash when we get a dividend and credit the investment account, and that's what that 44,000 is. So I'll put that there, and I will write off, maybe over to this side we'll say that this is the dividends received from sub. Okay? And that may drift off the screen a little bit, but that's okay. Okay, so what was sub company's total net income for the year? All right. Well, if we've got a 40% 40% investment in the sub, then what we can do is we can take our share of the net income, which is the 110,000, and divide it by the 40% interest, or I'm sorry, the 25% interest we have in the sub. And that takes us to 440,000. Let me format that for us. And that would be the right answer for C. And then part D says, what was sub company's total dividends for the year? And if they're paying 40% in dividends and we have a 25% interest, then we know we can just take the dividends and again divide it by the 25% that represents our share, and we come up with total dividends of the year of $176,000. Okay, let me just format this a little bit better. Put a $sign on the first answer that we need, and that's all there is to this problem. Thanks, everyone.